Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look at the euro currency. Guys, to be honest, it's just a few comments could be made here on the euro currency, and the situation stands a bit tricky because we have a bit confusing moments here, and I just explain what particular are they. First of all, we have the bullish reversal patterns, and one of them is the biggest one is the 3 drive pattern that we could also see on the weekly chart. This pattern suggests that reversal should start right from the 122.64 area. It's the area of the 1618 extension of this big butterfly, when the market already has hit the 127 of this minor. So that's the area of the crossing of these extensions. And that theoretical is the point where a 3 drive should start. The crossing of this 127 extension of the second drive and 1618 of the first drive. That's the first moment, and this moment is bullish. But from the other point of view, take a look that market has erased by the non-farm payrolls data on Friday has erased the bullish engulfing pattern that has been formed recently, and also market has closed below the monthly pivot support point. That's also a bit negative factor. At the same time, the reaction on the extremely positive surprise on the non-farm payrolls release was a bit limited because if you will take a look at the numbers, so market has given the numbers has given 300 jobs compares to 230 that has been expected. That was almost 30% upside surprise in the data. But reaction on this surprise was a bit limited, so market just has erased this recent upside action and has moved right below, right to the 122.64 area. So here market has passed approximately 100 pips to the downside. If you would get these numbers in some another place, some another time, the surprise for the 100,000 jobs, that probably would lead to some really significant drop on the euro currency, and market just could form in such situation very big black candle. But here that hasn't happened, so you can see that reaction was not as strong as it could be and as it was in the previous data releases of such sort when the market shows such sort of the positive surprises. That's as you can see, a bit complex situation right now. So, and the major question here, whether any upside action will start, and if it will start, where it should start. Whether the 3 drive pattern will start to work, or we should wait for something else. Upside target here stands at 126 area. That's the minimum target of the 3 drive pattern. That's also the level that was pointed by other traders in the comments by the Reuters that we have posted on Friday or on Thursday on the previous week. They also said that the most probable target of the upside retracement stands at 126 area. Well, there's no here we have some clarity with the target. But what will be the right behavior? What will be our right solution with the possible taking the long position? Should we take the long position at all, or better to wait something else? Well, guys, in this picture, although as I said on Friday, that 3 drive looks extremely perfect, and we have the divergence, bullish divergence with the May City, or just the combination of the 2 butterflies looks very attractive and so on. But what I do not like with this picture is that monthly target. We have the monthly target is 122 even, and we have the weekly pivot support one with the 122 even area. And if we suggest that upside retracement will start right from this area, it means that market will abandon the monthly target and turn to the upside before this target will be hit. And this idea I do not like. From that standpoint, I have very little wish trying to catch the moment for the long entry when the market stands just 50 pips above the 122 area. And for me, it seems more attractive situation where we wait for 122 level will be hit, and if it will be hit. And there we will think about taking a long position. Besides, we currently would not have any clear patterns on the intraday chart. So if you'll take a look at the 4-hour time frame chart, yes, we see some this minor butterflies, the 1618 is 122.57, but who knows whether it will work and whether it will treat really upside reversal. Maybe it will lead just for minor bounce, something of that sort, and turn into the downside again. Take a look. Here's the weekly pivot points, 122 even area. What I would like to say is that with some bearish moments, I am now speaking on erasing of the previous former move ups. The market has erased this down. It's always look bearish. With the positive non-farm payrolls data that also could impact still on the market on Monday. And because market stands just the 50 pips from the major target, from the major monthly target, it's really raised the question whether it's really worthy of trying to catch these positions 122.50 with taking this risk of the possible downside potential with the 50 pips, or better to wait more solid level where you could you will get some clear chances on taking the long position. Maybe market will form some real reversal pattern somewhere in this area after it will be hit. So in other words, it seems that the waiting for the 122 and thinking about the taking long position there will be just safer, because 122 is at least some support. Maybe it's not very impressive. It's not the fib level. This is not some oversold, some huge combination of but this is at least weekly pivot point, and this is the monthly target. For the weekly 3 drive pattern, the 50 pips move lower will not be really drastic action. This could, for example, take the shape of some spike of some shadow from the weekly candle on the weekly chart, and that could really hold and keep the 3 drive pattern valid on the weekly chart. But from the technical point of view, personally, I absolutely do not like the idea trying to catch here some unclear patterns, trying to catch and trying to take the long position and get the downside action against me for the 50 pips when the market will reach the weekly pivot support one and will hit finally the monthly target. For me, the balance between the profit and attractiveness of the taking position stands in favor of waiting for a 122 area. That's my personal position. Because guys, here it's really some curious action, so I do not like this raising of this action, raising of the engulfing pattern. So it's really moved down. We here would not have even the Russian rinse, so I take a look at the hourly chart. That's not the Russian rinse. The one hope for the possible appearing here something could become, for example, some double bottom pattern, but with this reaction of the reaching of the lows, it seems that it will not be formed. That's why the recent action mostly makes me think that some small leg down should follow, and to taking a long position somewhere around 122 seems more preferable right now than trying to catch some dip here and trying to take in position based on some blur patterns, blur hopes that market will show the upside action right from this area. Also, guys, you know that I speaking about it every time. I do not like to take the position and leaving behind significant target. And if it will do this right at around 122.50, 122.80 area, it will mean that we will leave behind 122 target. And personally, I feel uncomfortable when market when I take a position here and I see the target right below at the small distance from my position. From that standpoint, and I'd suggest that's better to wait, as I said, for 122 and see what will happen there.